Assalamualaikum warahmatullahi wabarakatuh. To my respectful lecturer, Sir Muhammad Shafiz bin Saharan. My name is Nur Fatihah binti Abdullah. So today I will discuss about the topic Fintech initiative undertook in Islamic financial system. So what is Fintech? Fintech is an abbreviation of the terms finance and technology, and refers to any business that uses technology to develop or automate financial services and processes. The idea is a large and a rapidly growing sector serving both customers and businesses. Fintech has wide applications, from mobile banking and insurance to cryptocurrency and investing apps. So Fintech is used and it's hard to help enterprises, business owners and customers better control their financial activities, processes, and live through the use of advanced software and algorithms that are increasingly used on computers and smartphones. When Fintech appeared in the 21st century, the term was originally applied to the technology used by the financial institutions' back-end systems. There has been a shift to more consumer-oriented services since then. However, and thus a more consumer-oriented concept, Fintech now covers various markets and sectors such as education, retail, banking, and fundraising. So Fintech is a part of daily life in Malaysia, where annual economic growth has averages under 5% over the past 5 years. So according to the new International Monetary Fund, it is increasingly become a core part of the country's financial market with significant promises of growth, IMF analysis. Malaysia is well positioned to take advantage of fintech innovation with its rising middle class, high cell phone penetration rates, and strong government support for the digital economy. So Malaysian companies and customers are ready to adopt the technology, from mobile wallets to electronic payments to crowdfunding and insurtech, the merge of insurance and technology. So in the last decade, internet banking Malaysia has quadrupled, topping a 90% usage rate in 2018. Mobile banking enabled by near universal 4G network coverage, affordable data is also booming, and 5G is in the works. So it is no coincidence that the 2019 Network Readiness Index of the World Economic Forum placed Malaysia high among the 139 countries surveyed, ahead of Italy, China, and Chile, and first among emerging and developing ASEAN countries. So now let us move on to the Fintech initiative taken by international Islamic financial institutions. So as Sharia-compliant finance expands and institutions adopt mobile and internet banking, they believe that despite its lacking of global standards, the opportunities presented by Islamic fintech will become irresistible to the sector. Although fueled by the ubiquity of smartphones, interest in the global fintech landscape has grown at a rate in recent years. So Sharia-compliant fintech has lagged behind as potential investors remain cautious. However, those active in the sector believe that it provides good opportunities, and that measures being taken in the key markets to build fintech ecosystems will help the industry expand. So first, Fintech initiative taken by international Islamic financial institution is the Great Fintech Race. The establishment of regional fintech hubs is one way that this is being tackled. Several countries are racing in the Middle East to build fintech ecosystems complete with regulatory structures and financial rewards, each vying to become a leading center. So this could have a huge influence on the growth of fintech in Islam. So the first step, according to Bashar Al-Nator, global head of Islamic fintech at Fintech Ratings, It is to have the right regulatory framework and in some cases incubator environments to allow Islamic fintech growth. So they saw this in Dubai, which is trying to become a center, so they can also look at Malaysia, which has an established track record outside of Dubai. Fintech have the first fintech accelerator in the Middle East was launched by the Dubai International Financial Center, the IFC, earlier in 2017. The inaugural 12-week program involving 11 startups began in August with Emirates Islamic Bank, Dubai Islamic Bank, and Abu Dhabi Islamic Bank among its financial institution partners, signaling a willingness to encourage Sharia-compliant fintech. So next, driving Islamic finance is one of the fintech initiatives taken by international Islamic financial system. Although more traditional elements of fintech have been successfully adopted by Islamic financial institutions, it will take some time for more modern fintech to be generally embraced. If we look at the actual Islamic banks, they have done well when it comes to mainstream fintech such as internet banking and mobile banking. So according to Mr. Al-Nador, at fintech ratings, with traditional banks, they compete, and the Islamic banks face challenges that traditional banks do not have for modern fintech. So the ability of Islamic finance institutions such as Islamic banks, takaful and fintech companies to move forward with the implementation of new models linked to different topics such as P2P, crowdfunding, and big data could be hampered by regulatory constraints and concerns. So in spite of this, Islamic banks seem to be aware of the possible opportunities on offer. The board of the world's 40 largest Islamic banks have earmarked a total investment of 50 million to 50 million US over the next 3 years for digital initiative. This is according to a 2016 study by EY, as they seek new customers and growth opportunities. So lastly, fintech initiative taken by international Islamic financial institution is standardization issues. So according to Mr. Moore, he claims that wider fintech adoption among Islamic players could help solve one of the key issues still affecting Islamic finance. So we have a traditional governing body. This scholar said this. So this is what is holding back the broader spread of Islamic financial adoption. But maybe fintech can be a catalyst for cross-border standards in every sector. We get broader acceptance until we start to get universal standards agreed upon. So it affects stuff when we have a fractured ecosystem of two layers, the regulatory layer and the scholarly layer. So it is something that has to be solved, and maybe it can be part of the spark for fintech. So time will say, but Sharia compliant fintech is likely to become an increasingly visible part of the global fintech landscape, with technologically advanced changing the way people perform financial transactions, and with Islamic finance expanding worldwide. So now we will discuss about the fintech initiative taken by the Islamic financial institution in Malaysia. So the effort of banks in the country to achieve digital maturity by 2020 are motivated by the rising demands of Malaysian customers and digitalization permits the life of the most in Malaysia. So with more than 50% of the population persuaded that a digital economy of Malaysia is a work in progress, and 98% calling for safe and secure online transaction organization, as stated by EY. The banking and financial industry is facing pressure to develop its fintech capabilities to better serve customers. So soft space deepens push into Japanese market with GMO partnership is one of the fintech initiative taken by Islamic financial institution in Malaysia. So Malaysian fintech startup Soft Space has announced that it has partnered with the Japanese payment service provider GMO Financial Gate GMOFG to incorporate payment solutions within the Japanese industry. With this agreement in place, SoftSpace will be able to help safe and seamless transactions between Europay, MasterCard and Visa (EMV) and will be able to introduce its suite of creative payment solutions to different sectors to Japan's economy. So SoftSpace and GMOFG plan to deploy further acceptance points in the near future. So this suite of the payment solutions developed by SoftSpace's homegrown technology capitalize on the convenience of smart devices to conduct cashless card transactions. It is estimated that retailers and partners that implement these payment solutions will be able to transact safely and lower their operating costs. So next, 11 fintechs join MDEC's digital financial services marketplace eBerkat to further support the financial well-being of B40 societies and SMEs. DEC has partnered with 11 fintech firms. So, Senam PKS, Microleap, PLT, Fundestic, Senadia, Assalam, Meteo, Aspirasi, Hello Goal, Visual Life, Funding Societies, Policy Street, and Luno Malaysia are currently the following players in the newly unveiled platform known as eBerkat Marketplace. So the companies involved comprise players operating in the following verticals: InsurTech, P2P, Loan, Islamic Fintech, Robo Advisory, Wealth Tech, and exchange of cryptocurrencies. So according to their statement, the primary objective of the eBerkat marketplace is to ensure that everyone receives protection from financial health, insurance coverage, financial security through investment, and microfinancing opportunities for innovation, as well as high growth potential for business expansion. And Encik Nur Hizam bin Kadir, MDEC's Vice President of Fintech and Islamic digital economy, stated that MDEC needs to continue to push digital economic growth and promote greater financial inclusion as the country goes through the current turmoil of the COVID-19 pandemic. So, this eBerkat marketplace platform has arrived at the right time and will undoubtedly help the B40 communities and MSMEs safeguard and improve their financial health. The future of fintech. The industry of fintech is huge. According to CB Insights, there are 41 VC-backed fintech unicorns with a combined of US dollars 154.1 billion. One driving factor is that many conventional banks and technology supporters and adopters aggressively investing in acquiring or partnering with fintech companies because it is simpler to offer what they want to digitally minded clients while still pushing the industry forward and remaining significant. In Malaysia, more talent needed to maintain speed with rising market demands. Financial institutions have stepped up their efforts to collaborate with local fintech firms to keep pace with the demands and develop the abilities of the former is Know Your Customer, KCY, processes anti-money laundering and digital identity management, which includes facial and voice recognition. Ultimately, the partnerships will result in enhanced remittance service facilitated by blockchain. So, online loan processes, digital wallets, and wealth management. As a result, both banks and fintech companies were on the lookout for talent such as software developers, cloud engineers, network engineers, cyber security engineers, project managers, and data scientists in the talent staff market. Moreover, more firms will focus on employer branding to real adapt talent, define traditional HR practice. The works market is becoming increasingly active, prompting financial organizations to find ways of recruiting candidates that are less conventional and more unorthodox. In order to boost their brand market share, rebranding is one, with several businesses painting themselves as media-savvy and digital-centric, setting up different fintech branches. If banks continue to do this, in particular, over the next 12 months, they will see their brand identity rise and bring themselves to attention of the candidates they want. In conclusion, in order to ensure Sharia enforcement, it is important to recruit the best talent. It is important that the CEOs of the company attaches the same weight to ensuring compliance with Sharia as he or she does with product creation and innovation. By achieving goods that actually accumulate debt by providing easy credit, Islamic Fintech should adhere to the spirit of Sharia-compliant finance. In Indonesia, for instance, Islamic Microfinance Cooperative (BNT) can only provide financing to genuine micro and small enterprises. So Sharia spirit should be rooted in the good, and services are not merely too decorative in nature. Startups, given their large scope. Software is the key that enables businesses to reach broad segments of understand customers and should be used effectively to build comprehensive structures and controls for KYC, AML, and risk management. For unbanked communities, this means building digital identities. Key Islamic fintech stakeholders, including regulators, incumbents, and challengers, must collaborate with scholars of Sharia to align with their vision and knowledge. So that's all from me. Thank you. Bye.